astonishing rates of change. And it seems like they are unstoppable, except when you think about that. Wait a minute, 10 times per year these models are growing. What does that mean? How are we going to get through all of this? But maybe that's a topic for another day. It's just the change is happening very rapidly.
Well, it's indicative of how much investment needs to go into the hardware to support these AI models, right? Like if you imagine if you can create an AI model that replaces a lot of the sales function of a salesperson, or makes that person's job that much easier, makes them that much more productive, then you would pay a lot of money for that if you're Salesforce or another software as a service provider, because the end business will pay a lot of money for that. And since the investment in the model that enables you to do that is a one-time cost, it's basically you're investing in compute, you're investing in collecting all the data, you are training the model, and then you demonstrate kind of the capability and the productivity uplift you get. You'd happily, you think about that as an asset that you have invested in that actually will yield a very high return. And so within the deck, you can see our forecast that, we think the cost to train an individual model could grow to $1 billion or $100 million. However, right, like there's also all of this innovation on the cost decline side. So it's hard to say exactly what each unit model will look like, but I think it's clear that people are doing a lot more investment in the underlying compute capability to deliver these models, and thinking strategically about business model setup to make sure they're scraping in proprietary data to then give them an advantageous position relative to kind of the new capabilities being unveiled by deep learning.
We think that ARM and RISC-V are going to displace Intel in the data center, mostly because they can accomplish what we're talking about so much more easily and less expensively than Intel. So Intel's market share in the data center, which is the most profitable part of their business, I believe, we think will go from 92% share to 27% share by 2030. That's kind of a wake-up call for those index funds who have Intel as the largest semiconductor position.
And there it's like a few factors that are kind of headwinds. Apple going direct to its own ARM chips on its laptops will port over the developer base. You can also argue that within the data center, the CPU, which is where Intel is dominant, that becomes less critical to performance as more applications moving to a deep learning environment, where they're using accelerators, either FPGAs or GPUs by the likes of NVIDIA. And so then, because you're not performance differentiating on your CPU, you're not willing to pay some extra normal premium to kind of buy the best-in-class CPU. And at the same time, at least in custom chips developed by Amazon and other cloud providers we anticipate in the future, you can already get better bang for your buck on ARM and likely on RISC-V in the future. And so there's a lot of choppy water in the traditional CPU space to come, in our view.
Yeah. And actually, just highlighting that one point, the traditional benchmarks out there, if what we're saying about disruptive innovation is correct, and these S-curves are feeding one another so that these trends are accelerating, it probably means the amount of creative destruction out there is going to be pretty serious. And I think it will hit, again, the traditional world order, which today is represented by the broad-based benchmarks. So again, it's really important to be on the right side of change when it comes to innovation. I'd like to bring us into maybe a little more quickly. We spent time with deep learning because it is really critical to everything that's happening. But from virtual worlds and digital wallets, Bitcoin, electric vehicles, autonomous automation, drones, orbital aerospace, as you mentioned, the DNA sequencing, AI is going to touch every one of these. But maybe, why don't you select the next one we talk about, Brett?
Well, sure. I think a topic that I return to again and again is kind of autonomous taxis, and people are skeptical that we are actually going to be able to deliver an autonomous taxi service, a taxi where you don't have a driver in the driver's seat. And the pace of change in AI informs our view that is more likely, you have, at least from my perspective, you have to believe it's more likely at the, this point in 2021 than you did 12 months ago, because of so many basically critical thresholds neural nets have crossed in domains that you didn't necessarily expect them to be able to perform at the level that they're able to. And what's interesting about, to me, the autonomous taxi space is, if you can deliver autonomous taxis, you should unlock a huge market opportunity measured in the trillions of dollars. In the deck, we talk about more than $1 trillion in operating profits accruing to the platform operators by 2030. And so, like, just within equity markets, if somebody's doing $1 trillion+ in operating profits, you should be willing to pay, well north of $10 trillion for that collective set of entities.
Right, and I'll just maybe provide a little more perspective there. So the ride-hailing companies globally today are valued in the marketplace at roughly $200 billion. And what Brett is saying is this multi-trillion-dollar opportunity has just started, and the ride-hailing players in the market today are not in the pole position to enjoy this ride, so to speak. It is the companies that have been collecting data. Data is the new oil. I know that's trite, but it really is in this case, because it is the companies with the largest pools of data and the highest quality data with the best AI expertise that are going to win this game. And of course, Tesla is our largest position for a reason. We've studied how much it has done to make autonomous happen. And I think the miles of data collected are now north of 30 billion miles, 30 billion miles, just Tesla. And I believe Google is 30 million miles. Now, Google is probably the finest AI company in the world. I think that a lot of people agree with that. But in terms of executing on this challenge, it seems like Tesla has pulled together the right people with the right data, with the right vision. Just because a company is expert in AI does not mean they're going to win the spoils. It's really the applications.
Yeah. And actually, if you look across the platforms, one of the, I think, interesting byproducts of the modeling that we do is AI is the most equity market cap is captured by AI of our platforms.